Welcome everyone and good evening. Welcome to, we're having a cable show talking about setting our tax rate. And tonight I'd like to introduce our town manager, John Scruton, Rosemary Bayek, our tax collector, and John Sherman, chairman of the Board of Selectmen. Taxes are never popular, but without them, our lives would be far more difficult. Taxes pay for the roads on which we drive, to construct and repair them, and clean them of snow in the winter. Taxes pay for the fire and rescue department and the police who protect us. Taxes pay for the schools in which the vast majority of us were educated. Taxes also pay to have a safety net to help those who are unable to help themselves. Taxes pay for reducing the risk of disease and for the enforcement of life safety codes. Taxes pay for recreational programs and the protection of our natural environment. Without taxes, our way of life would be dramatically reduced and everyone's life would be more difficult. I'm going to ask John Scruton to please review our first chart that we have tonight that talks about the setting of taxes. John?
Setting of tax rates begins by determining what the total spending that the town is responsible for will be. Once that level of spending is determined, we subtract all the revenues other than property taxes. We get revenue from a variety of sources, so we'll subtract those. That gives us the tax commitment. The tax commitment is the bill that a tax collector will present to the Board of Selectmen. The Board of Selectmen then will mail that total, raise that total tax commitment by sending each person a tax bill. What each person pays is determined by dividing the tax commitment by the total assessment to get the rate, and then multiplying the rate for each person's property times what their individual assessment is. When all of that money comes in, it is the total tax commitment, which is the difference between spending and revenue.
Let's look at these a little more closely. John Sherman, can you please discuss the spending side of rate setting for us?
Sure, I'd be glad to do that. First of all, I wanted to reiterate what Martha said about taxes never being popular. Certainly this isn't always a popular topic, but the Board of Selectmen felt it was important to explain to the taxpayers how the tax process works, how your tax bill is calculated, and to give you some reason why you will see a different tax bill this year as far as dollar amount than what you have seen in the past. The biggest reason is going to be related to the school funding legislation that was recently passed, but John Scruton will speak to that more in a minute. The three components that make up the spending level is the town, the school, and the county. The town spending level is set at town meeting, and a budget is established, and of course the Board of Selectmen cannot spend more than what was approved at town meeting. The school budget is set at the school district meeting, and again, the school board is required to only spend to what is budgeted at the school level. And the third component of that is the county tax bill, and that is set by the county state representatives, or the state representatives from this county setting a county budget, and again, that budget cannot be exceeded. You're getting a quick look at our tax commitment history that shows those three components, and we'll speak to that in much more detail in just a couple of minutes.
Let's look at the revenue. What kind of things go into the revenue? John Scruton, can you help us with that?
Yes, on the revenue side, the municipality raises revenue from a number of sources other than property taxes, and these revenues are what we have to determine and subtract from what the town meeting has approved for spending. The largest source are auto registrations. We raised about $1.4 million a year in auto registration fees. We also raised money from building inspection fees, from a variety of other sources, everything from dog licenses to permits for people who want to put in a swimming pool, who want to come before the planning board or the zoning board. There's a lot of different revenues that come in. We also receive a lot of grant money from the state, and it's probably our second largest source. We receive money for highway that can only be used for highways. We receive what's called room and meals tax money, which is from the entire room and meals tax in the state. They divide it up and sent back to the communities from the state for use in a variety of purposes. So that's what we have on the municipal side of the revenues to subtract from spending to reach the tax commitment. On the school side, some of those revenues are subtracted before they even get to tax rate setting. The biggest one of those has to do with state adequacy money, which is the money which is supposed to be equally distributed throughout the state. What happened this year in the legislature is that there was what I consider a money grab by a number of communities that were so-called donor communities. They do not want to pay their fair share. They formed a coalition with some of the other communities, Manchester being the largest of the group that joined with them, and they were able to significantly reduce the revenues that Plaistow and a lot of the other communities in the southern part of the state are receiving. Those communities have formed a group called CAFE, which is a coalition for adequate funding of education, which is suing the state over this, what we believe to be an unfair reduction in revenue. But the total loss of revenue is over $300,000 for Plaistow. And a large part of the increase in the school tax rate is due to the fact that those revenues were lost. So those, going back to chart number 1 if we could, which shows spending minus revenue equals the tax commitment. We do have a lot of revenues, but this year we have less revenue than in the past because of what happened there at the state with education.
Rosemary, when you subtract the revenue from the spending, you end up with something called tax commitment. Can you explain this to us, please?
You will find that after we get through the spending and the revenue, we end up with our tax commitment. This means what we need to run our town and our school and our county. And if you look at your tax bill, when I get it, you'll see all these broken down. And the commitment is given to me by the selectmen saying, okay, Rosemary, now you can collect this money so we can run our town and schools.
Thank you. The next chart we're going to look at is going to be the tax commitment chart. How has this changed over the years, John Sherman? Can you help us with that?
Sure. If we could bring up on the screen chart number 2, which is the middle chart called Tax Commitment History. Thank you. In the past, we've always talked about taxes changing from year to year by comparing the tax rate. People would say, how much is the tax rate going up or down? And that doesn't make a lot of sense anymore, as we spoke about previously when we were talking about assessments changing. Because assessments changing, going up, the tax rate is going down. So comparing a tax rate from one year to the next doesn't make as much sense as it used to. What we think is a much better representation of where your tax dollars go is the chart that we're showing on the screen now. And if you're having trouble reading this chart, it's on page 51 of last year's town report. We've been producing this chart for the last few years. We didn't just put it together for tonight's presentation. So if we could go back to the chart, please. You can see a trend for the last 11 or 12 years, starting with 1994 and going to 2005. There are 3 bars in each year. One represents the municipal tax commitment, one represents the county, and the largest one is the school representation. As you can see, the 2 smaller ones, which are the county and the municipal, for the most part have been fairly consistent over the last 12 years. But I think you can see that the school portion has been growing very consistently over the last 12 years. And the one drop that you see there in 1999 is when the state funding of education took place, because this chart is showing you what we need to raise from residential, from property taxes, and so the funding that comes from the state is taken out of that. This is after we get the revenue from the state. So for example, if you go to the most recent year that we have on the chart, year 2005, really the total school cost for the town of Plaistow is really 1.8 million higher than what you see there. But I think what's obvious on that chart is that the biggest portion of your tax bill, as you already know, is because of the school costs, And that's why we're particularly concerned about losing over $300,000 worth of funding, and that is a big effect on your tax bill. And we hope you take a look at that chart. Look at page 51 of last year's town report.
John, how can the total amount that needs to be raised by taxes be reduced?
Well, obviously, there's two ways. The biggest way is, not the biggest way, but one way to do it is to reduce spending, either at the town or the school or the county level. Speaking it from the Board of Selectmen, we try to keep the budgets as low as we can every year. Last year, during our budgeting process, we took $100,000 out of the operating budget. We're going through the budgeting process right now, and again, we'll try to be as frugal and as reasonable as we can when we present to the Budget Committee our budget, and then for their consideration, they will actually present the budget to town meeting. Another way, obviously, that we can control spending is at the school district level. Again, the same process there, except it isn't the Board of Selectmen, it's the school board and the school budget committee that are setting the, presenting the budget to the school district meeting. And the other way that we can reduce our total tax commitment, as John said, is look for other sources of revenue. The biggest other source of revenue right now is the state funding of education. And because we're losing $300,000 or getting $300,000 less revenue there, that is impacting the tax commitment at the local level, and therefore that the local taxpayers having to make up the difference of that $300,000.
Thank you. If we could go back to chart 1, please, again, the tax commitment. The total assessed value of the town is used by the state in setting the tax rate. I would like the town manager, John Scruton, to address this. John, how does the town determine assessments, please?
Assessments, as you can see, is the number which has to be divided into the tax commitment to set the rate. Assessments by law, and pardon me if I read a little here, but I want to read from Chapter 75 of the state law. The selectmen shall appraise all taxable property at its market value. Market value means the property's full and true value, as the same would be appraised in payment of a just debt due from a solvent debtor. Now, annually, in accordance with state assessing standards, the assessing agents bring to the selectmen recommendations on what the assessment should be for the town to bring it to market value. As you know, real estate has been going up in value. If you've looked at what your neighbors have sold their homes for, those values have continually gone up. And as the total assessment, which is the bottom number in that equation, goes up, the rate will come down. That doesn't mean the tax commitment changes. We need to raise the same amount of money that's determined by subtracting revenue from spending. It simply means that the rate will be lower because the assessment of the town as a whole is higher.
John, can you follow up on that, please?
Sure. We could have a lengthy discussion some other night on the appropriateness of property taxes being used as the major source of revenue in the state and at the town level, at the local level. But we don't get to make that decision. Perhaps other ways of deriving revenue would be more fair. Obviously, other things have been talked about, things like a sales tax or an income tax or increased revenue from gambling, for example. But at the local level, we obviously don't get to make those decisions. So what's important to us is that when we do the assessing, go through the assessment process, that we establish assessment values that are as fair and as accurate as we can make them. And we certainly try to do that. But I'm sure that many taxpayers would feel some frustration that one of their most precious assets, which is their property, their home and their land, if you think about it, you should feel great that that most precious asset is increasing in value. That should be good. But unfortunately, because you're required to pay taxes on that amount of money, on that value, I'm sure you're frustrated about that, and we all feel the same way. We're all taxpayers too. But again, the most important point from the Board of Selectmen's point of view is that whatever assessment values we come up with is fair and accurate for everyone in town.
Thank you. Could we go to the third chart, please? Once the assessments for the entire town have been set and added together, we are now ready for the Department of Revenue to set our tax rate. Rosemary, could you explain to us how the tax rate is set?
Well, the Department of Revenue Administration does set the tax rate, and they take all the information that the school has given, the assessors have given, and the town manager goes up with all these figures, and they decide how it's going to be spent. And as you can see, on the 2005, this year, the municipality, which is the town, is paying $3.5 on the taxes. The local school, which is our school, 9.63, that's $9.63. The state portion is $2.53, that is down from last year, and the county's is down 94 cents. You add those all up, your tax rate now is $16.64 per $1,000 of your assessment. And this is done by the state, not the town.
Sometimes people have a hard time comparing from one year to the next when there's been a revaluation of the assessments. Can you explain what has happened to taxes, John Scruton?
Yes. If I can go to chart 3 again, and we will need to have those, yes, that's good, to have the percentages on the bottom lines. The numbers appear that the tax rate has dropped in all 4 categories when you look at what has happened to the actual rate. But as we have explained, because assessments went up, rate goes down. It's like a seesaw. So as the rates have gone down, we still have to raise actually a slightly larger total tax commitment. So if you look at the municipal figures, you see that the tax commitment for '05 is 2% higher than it was last year. So if there had been no change in the assessment, no change in anyone's assessment whatsoever, your tax bill for municipalities would have gone 2% higher because of changes in revenue and spending. The local school, the change would have been an 11% increase. And we've already talked about how a big portion of this is due to the loss of revenue at the state level to the towns. The state school tax actually dropped 3%, and again, that's somewhat a shifting of the state responsibility onto the local tax rate because they lowered the state school tax rate, but they, at the same time, increased the local tax rate. So while that appears to have dropped, it's just a fiction because they added that in. So that's another explanation for why the school is up 11%. The county is up 7%, and the overall tax commitment is up 7%. So while the rate has dropped by 25% because assessments have gone up, the actual increase in the total tax commitment that the selectmen gave to the tax collector to collect this year is actually 7% higher.
Can you explain, John Sherman, why if some of the tax bills have gone up more than 7%?
Sure. I know that we're throwing a lot of numbers out there and a lot of charts for people to look at, but I think that's what you should focus on. The average tax bill in the town of Plaistow is going up 7%. The average tax bill is going up 7%. And it's made up of those 3 components as we showed you. The town portion would be going up 2%, the county portion 7%, and the school portion 11%. Those averaged out brings you to an average increase in your tax bill of 7%. Now, some people will be going up more than 7%, and some people will be going up less than 7%. And that's driven by the assessments that were done. If your assessment of your property went up by more than the town average, then your tax bill is probably going up more than 7%. But there are an equal number of people whose tax bill is going up less than 7%, and that's because their assessment did not go up as much as the average. As a matter of fact, there are some tax bills that went down. We're already seeing that, but the average increase is 7%, and that's a number that you should remember and take with you. I know we're throwing a lot of numbers at you, and sometimes it can be confusing with all the charts and numbers, but hope you remember that number.
Thank you. Rosemary, what if someone thinks their assessment is wrong? What can they do, if anything?
There is a form that you can fill out. It's called an abatement form, and you get that at the town hall when we get back to town hall. And we're at the library right now. But you have to wait till you get your December bill. And then if you think your assessment is incorrect, you come down and you fill out this abatement form. The assessing agent will make a recommendation. They will give it to the selectmen, and the selectmen will decide whether they want to grant this change in your assessment.
And if for some reason the the property owner still doesn't agree with what the town do they have any other recourse that they can do from there?
Yes, they do. Once they've done this assessment, if they receive a letter right away saying we are not going to change your assessment, they can file with the New Hampshire Board of Tax and Land Appeal. They have till July 1st to do this, and it also will go unto September. So you really have till September 1st if you do not agree with what the town says. You can also go to court with this, but you cannot do both. You cannot go to the New Hampshire Board of Tax and Land Appeal and the court. You have to pick one or the other.
Could someone please just maybe refresh and go over Chart 1 one more time for our viewers tonight before we close?
On
Chart 1, can we go to Chart 1, please?
that's your turn.
Yes, if we look at this, you take spending. Spending has been approved by town meeting, by school meeting, by the legislators that you elect. You subtract all the other revenues that we can have, and in some cases those are state revenues, in some cases they're things like auto registration or dog licenses. You subtract those, and that leads to the tax commitment, the total amount of money that needs to be raised. What the assessment is has no impact on what the tax commitment is. They're two totally separate numbers. But you take the assessment, you divide it into the tax commitment, you come up with the rate. When you multiply that by every individual homeowner's assessment in the community, you then come up with what the total tax commitment is.
Thank you. Rosemary, one more question. Where will the taxpayers come to see you? If they're looking for you, I know with the reconstruction of Town Hall, where are you located?
Right now, we're in the Plaistow Public Library. If you go in the front door, you'll see the librarians where you bring your books. If you stay to the left, go all the way down to the back, we're right on the left. Mailing is very easy to do. We do get our mail on time, and we do always use postmark. We hope to be back in Town Hall by November 21st.
Thank you. So for right now, if someone wants to see you, they go to the library on Main Street to see Rosemary. But starting later in November, they will see you at Town Hall. I'm going to ask John Sherman and then John Scruton if they have any closing comments. John?
Thank you. I do want to take this opportunity to thank the Cable Committee for letting us do this program. I wanted to summarize by saying that we're not here to blame anyone on the tax bill or what's happening with your taxes. We're here to explain how the calculation is done and where the numbers come from. We hope that we've communicated and perhaps educated you a little bit, or enough, we hope, on issues related particularly to this year's tax bill. Your taxes are going up. Someone needs to deliver that message. Some of you already know that because you've looked at your taxes. The biggest reason for your local tax bill going up, we believe, is because of the state legislation that has reduced the amount of state educational funding that's coming to the town of Plaistow by over $300,000. That's having a big effect on your tax bill. As John mentioned earlier, we have joined with some other towns to try to fight that legislation. We are part of the New Hampshire Cafe process that's being spearheaded by Londonderry as they are challenging the legality of that bill. There are many towns, especially as John said, in the southern part of the state, that are being affected in a similar manner. But our efforts to get this case heard by the court and have some outcome, that is in our favor hasn't happened yet. And so your tax bills this year are affected. We are still going to be fighting that case, and we hope that next year there will be a different situation. So our point tonight was to explain some of the issues that go into the local setting of taxes, particularly related to this tax bill. We know that this is an emotional situation. We are trying to be as fair as we can about it, and at the local level we are doing what we can, which is to control spending, certainly from a town point of view, and also to make sure that the assessments are as fair and as accurate as we can make them, and also to communicate to the taxpayer just exactly what is going on.
Thank you. Thank you. John Scruton?
I would like to remind everyone that the tax commitment went up 7%, and that's the difference between revenue and spending. And that means that the town has to raise 7% more money, and that has been distributed as fairly as possible. However, there are some people out there on whom this burden may fall much harder than others, and I'm thinking particularly of the elderly and those on fixed incomes. There are programs available. I want you to make sure you're aware that we have exemptions. We have an elderly deferral process where, like a reverse mortgage, you can defer paying your taxes if you come in and meet with a selectman and fill out some forms. There are programs available. We want to help you, so if you find this to be a burden, don't hesitate to call the assessing office, and we will try to work something out with you.
Thank you. Well, I'd like to thank Bob Carolyn and Maddie Marcotte for helping us here to film this. I'd like to thank the Chairman of the Board of Selectmen, John Sherman, our tax collector, Rosemary Bayek, and our town manager, John Scruton, for sitting in and filming this tonight. And again, thank you for watching, and don't hesitate to call the assessing department if you have any questions, and that number is 382-5766. Again, thank you and good night.